toil and trouble, fire burn and cauldron bubble. From tulips to canals, cotton, railroads, rubber to dotcom. There have been many investor manias in the past. Are we in another? And dare I name it, Sino Mania? But first, a news flash. Along Mobile Technologies of Xi'an, a provider of services to mobile phones and wireless devices, has gone from pink sheet to over-the-counter bulletin board. It is now traded at symbol AGMB.OB. Since debuting, the stock has dropped over 8%. Regarding our recent report on pollution in China, Beijing has indefinitely delayed its action plan on climate change with no explanation. And the United States government is pressing China again at the World Trade Organization, this time on piracy of music and movies. Signs are, and many influential economists believe, the USA, under a Democratic Congress, will most likely impose real protectionist penalties on Chinese trade within a year, an important possibility to plan around. Chinese stock markets are closed for the rest of the week for the May Day holiday. I'll have a look at the numbers next. Today was the first day of trading for China CITIC Bank, and share prices almost doubled. China CITIC is the biggest IPO so far this year, raising almost $5.5 billion US. But the Bank of Communications, China's fifth largest with a long history of foreign banking activities, is on target to raise around $3 billion US in its domestic listing on the Shanghai Exchange after attracting a staggering $188 billion worth of subscription interest for its A shares. That sum, many reporters point out, is larger than the market value of JP Morgan Chase, one of the 20 most valuable companies in the world. Superlatives abound when talking about China and its stock markets. Already, Chinese markets have surpassed Hong Kong to become Asia's second biggest, with market capital at $2 trillion US. Of the top 50 companies in the world ranked by market value, according to Forbes magazine, at least 6 are Chinese, including PetroChina, fast on the heels of ExxonMobil. As April ended, Chinese markets reached, yet again, new record highs. The Shanghai Composite closed April 30 at 3,841.27. The Shenzhen Composite reached 1,064.65, both new highs. And the story is the same at all levels. The CSI 300 index that represents 300 A shares and is a benchmark of the domestic equity markets tripled in the past year, closed April 30 at 3,558.71 and is the second best index performer in the world right now, reflecting the insatiable appetite of foreign investors for foreign shares. The Shanghai B Index, Shanghai B Share Index, B shares are available only to non-Chinese investors, were up over 7% April 30 alone to a new high close of 231.13. Compare the Chinese record to Japan's Nikkei Index that has yet to recover February 27 levels. Corporate profits continue to surge and new issues to surprise. Companies we mentioned just recently, China Molybdenum is up 60% and Country Garden up 35%. Meanwhile, Beijing is trying to influence investor behavior by increasing, once again, the reserve requirements of banks to rein in lending. But the Shanghai Exchange is busy planning ways to allow foreign listings on Chinese exchanges. And China's dynamic mobile phone providers encourage you to trade stocks while you sit on the subway or wait between meetings. Indications are we are in the most speculative phase of the China stock market story. Classical economists and many well-known bears in the advisory business will tell you that this is a sign of the final phase of an investment boom. We are headed for a fall. One thing remains clear. China is accelerating at a rate not seen since the great booms that built the capitals of Europe and changed the United States from farmland to skyscrapers. In the time it takes an American or European agency to begin planning for a subway extension, Beijing will double the size of its underground mass transit in advance of the Olympics next year. 3 years ago, almost to this day, Time Magazine's Beijing bureau chief used the same line from Macbeth that I used to start my broadcast in describing China and its overheated financial arena. That same time, Andy Shea, then the esteemed chief China analyst for Morgan Stanley, called China a bubble. A year later, Chinese markets tanked and didn't recover for almost 2 years. Are we reaching the top again, or just another notch in a long progression like the Great Wall undulating up and down forever across the expanse of China? when and if China's markets do really crash, Sino Mania will go down in history along with the tulips. I'll see you next week.